Good morning, everyone. We're going to start here shortly. Okay, everyone, we're going to go get started here. So thank you for taking some time to sit with myself and Christy Magorian. Christy is from Assurity Life. She is a regional sales coordinator with them. She spent the last 15 years collaborating with sales directors, insurance specialists, marketers, and individual agents on their recruiting efforts, developmental, and strategic planning. In her spare time, she enjoys volunteering, reading, bowling, and spending time with friends and family. So thank you, Christy, for joining us today. I'm going to start here with a couple slides before I pass it over to Christy. It is Disability Awareness Month. I did put a calendar, a social media calendar in the handouts portion of this webinar. It gives great information on different facts and different statistics on disability insurance. And it's nice because it gives you a different post that you can post every day of the month. So without really having to think much about what you would put on there, it kind of gives you the content to use. So again, that's in the handout portion of the webinar here. In today's topics, Christy will be helping you out with what you should be thinking about when selling disability insurance, utilizing riders to maximize the benefits for your clients, as well as the different opportunities in the small business arena. So at this moment, I'm going to change it over to Christy. Thanks again, Christy.
Thanks so much, Joey. And we're just take a minute here while we get this started. So yeah, just wanted to thank you guys all again for joining us this morning. I was hoping when you saw kind of what we were going to be talking about today that it would drive a little interest as being something different that you may have heard before. Now, I've been working, as Joey mentioned, I've been here at Assurity for 15 years. And so I've seen a lot of trends on different products come and go. Some of them that are really good obviously stick around and come back. But I think we're kind of in a new era of things now, and kind of important for us as carriers too to be giving you guys ideas of things that fit in that mold. So just to start, I wanted to let you know we did a study here at the company. Took about 1.5 years, and this was not focused on insurance necessarily, but just on consumers and things that they are looking for. And I think we all can agree with what you see. We all want more options at less cost and less time. So I think about just myself. My husband and I needed to get a new trash can for our kitchen this weekend. Instead of just what would be the easiest thing to do of driving to the store and purchasing one, we jumped on Amazon and bought it on there. And it's there just because that was a time thing. The cost probably wasn't any different than it would have been going to the store, but we had way more options that we could choose from than maybe the 5 or 6 that would be at the store, and we were able to purchase it in about 30 seconds. So really think about, how that works and how, that really reflects on most people, whether it's a one time a week, one time a month, or one time a year. Whenever you are looking for something, you're wanting solutions that are quicker. And so that's something we've really been focusing on here at Assurity, is how to build things up to be able to reflect that as well. One secret I will tell you guys, and you'll be the first to hear this, we soon will be rolling out a DI application, and this probably will be third quarter, that actually will have accelerated options on it to get an instant decision on DI. So we are really going back in our portfolio and looking at that factor, how we can make that process easier for you and to meet what that consumer is looking for. So there's one thing I've come to realize on talking about insurance with clients, with other agents, and just with coworkers, is what we actually are looking at when we talk about disability insurance. And if you think about it, the average consumer, and this probably even relates to some of you guys on this webinar, when we talk about disability insurance, the first thing you think about is that handicap sticker or sign you see at the grocery store. And so the misconception of disability insurance is something that is going to make you have to park in one of those stalls, where you're using maybe a wheelchair or other devices to be able to transport. And we know that's not the case, but it's been a big misconception in the disability world for years. So what I always like to think about with that is I call it my income protection. Now, income protection, we know that is something that's going to give that different picture for the consumer. They're going to be thinking about their paycheck, and they're going to be thinking about the things that they purchased with that paycheck. So it's easier to relate. Now, one thing, so I am a licensed agent as well. I sell on occasion, and mainly just to kind of see what the consumers are looking for and to get new ideas and things to use on my trainings and things with agents. And one thing that I have come across a lot lately is, one, it is a misconception again of what disability insurance is, even using the words income protection. But what I have found is it really works better to relate to something the consumer has purchased. So some of the things you see on your screen there, whether it's at a Verizon or a Sprint or a T-Mobile, AT&T, cell phones. Whenever you go and get a new cell phone, they always talk to you about insurance. Whenever if you're at Best Buy or Home Depot, Lowe's, any of those stores, and you purchase new appliances, you have options for insurance plans on those. Best Buy, getting that TV, definitely. Now, those premiums are usually, well, for most of the items besides the cell phones now, are usually one hit. So it may cost you an extra $50 today to put a 2-year insurance plan on that new refrigerator you bought with that cool TV screen on it. And you're probably going to do it. And the reason you're going to do that is that refrigerator probably costs $3,000, $3,500. And if something were to happen to it, you're probably not going to have another $3,500 handy to go and replace it. So what I really started to do with the consumers is have the conversation about the last thing they bought that they purchased insurance on. And usually for most of them, it's going to be either that cell phone or a TV. Unless you're working with someone who just purchased a new home, you're more likely to get some type of appliances there. But 9 out of 10 of them will tell you they purchased that insurance. And when you ask them why, they'll tell you, well, we just bought a new house, or, the cell phones have gotten really expensive. They don't have all of the mail-in rebates you can do anymore as they used to. You have to pay either up front for your phone, or you're paying a monthly fee for your phone for 2 years. And so you do the insurance because, it's easier to pay $50 for a new phone than it is another $1,000. So what I like to do is try to relate that back to them to their own paycheck. So how important is, if you were, instead of these pictures, were to show them a picture of a house or an apartment building or a car, or, if someone has tuition payments or any other bills. So what happens if you don't have that paycheck and you can't pay to keep that roof over your family? What happens if you don't have a paycheck coming in and your student loans go into default? What happens in those scenarios? We know what happens. It's the exact same thing that happens with these pictures you see on the screen. They just need you to help relate that back to them. So I know sometimes it feels kind of weird to I'm going to throw in a conversation with a consumer at the beginning and talk to them about the new TV or a cell phone. They're going to think I'm kind of crazy, but it's what it is. And it's easy for you to get them to relate back to that because they will understand it a little bit differently after you've related it to something they've already seen the need to purchase an insurance plan for. So trust me, it sounds kind of crazy, but it actually works. So really thinking about disability insurance, it is the missing link to every other type of insurance your client may purchase. Looking at, there's one thing you'll see in the industry everywhere is that lovely pyramid of all the different things. So I want you to think about, whether you are an agent who works in some type of financial advising environment, whether you are just selling mortgage insurance, you're selling just life insurance, maybe you're a P&C agent, maybe you're selling health insurance. What happens to all of those premiums if the client does not have a paycheck? They all go away. And I tell you what, working with a financial advisor, they're probably one of the hardest ones to crack to really get the need. But if you're really taking the time and helping that client out with their needs, what if something were to happen and you were to pass away? Well, we have that life insurance, but what happens if you live, but you have no money coming in? And so again, it's just kind of in that situation, you're kind of relating that back to the agent or helping, if it's you even, look at those scenarios and think about those clients that you've worked with over the years and what happens to all that you have done if you did not tell them that. I like to refer to that as the Monday morning call. So if you just imagine, you've worked with a client, let's say for 5 years, you've got them on track, maybe you even helped them pay off a little debt even with just suggestions and things you've helped with. They have a pretty solid financial plan. Now, what happens on Monday morning? You get a phone call from either Mrs. or Mrs. Jones saying that the primary breadwinner of their house was in a serious car accident this weekend and is probably going to be missing work for a good 6 months. Think about how that would make you feel knowing that you've sold them other insurance products because you're helping them prepare for the future, but maybe you left out something that should have been actually probably at the top of the list. So it really is that missing link. So think about that. Even if it's something you really haven't thought about selling, there's ways we can help you to go through a simple sale too, to kind of start off easier. So I always like to mention a few stats. I'm not a big fan of stats, but I always like to show them because sometimes you have a consumer that maybe needs to see that information and you want to show them that information because they don't quite believe you always. It happens. Now, one thing I found really interesting actually is LIMRA recently did a survey of people who have used GoFundMe. Now, I'm sure most of you have heard of GoFundMe. I see them all the time on social media. Sometimes you'll see them on the news when something has occurred. So LIMRA did a survey of people on GoFundMe page who had started pages up for other people, did a survey of them asking about a need for disability insurance. And surprisingly enough, and it probably had, in some scenarios, had to do with if they just helped someone get some money for a need they had. 48% of the people surveyed that responded to a survey said that they realized the need for DI but didn't have anything. Now, 20% of those people who answered that question were very interested in finding out more. They wanted to know more about disability insurance and where they could get it, because from what they just saw, they didn't want to have their own family have to deal with that. So there's plenty of resources out there if you guys need them, and I definitely encourage you to take a look into them as well. Now I want to get into a little bit of an idea for you. Now this is something that you can use really for anything, any type of insurance you're selling. I like to use it for the disability world because I find it kind of strikes a chord as something the consumer can go and look at themselves as well. So if you have not ever taken a chance to look at Google Trends, I encourage you to do that. One thing you will see where I have the arrow down on the bottom, recently trending things. So like this week's Nurses Week. Perfect opportunity if you're looking for a new client to get a hold of a nurse. Teacher Appreciation Week is also this week. Perfect opportunity to contact a teacher about going over their insurance plans. So you always get some ideas within the recently trending of just new markets you can go and target. You know, maybe one of your good friends has a good friend who is a teacher. You know, ask them to help you make that connection, and start off with, you know, Teacher Appreciation Week really is, you know, it's a great thing because teachers do a lot of things for us. They do a lot of things to help prepare students for the future, but what have they done to prepare for their own future? You know, you can be that one to help them realize there may be some gaps there that they need to fill. The other thing I like to do as well is take a look at where you see trends on topics. And this could be something, you know, whether maybe you're doing a seminar where you're inviting in clients to have that discussion, whatever it is, you can utilize this as well. So this one, I just did Google Trends search on disability insurance. You can see, I mean, it's anything in blue has had some interest in it. Now, just to pull a big state over near you guys, I dug into New York. This will break down by county where the higher interest is at. And then you can click on a county and a city to see the actual more of the information on that interest as well. So I always like to use that too when I'm working with a consumer here in lovely Lincoln, Nebraska. You know, one that would have been Google trending for us this week is a new mayor. We elected a new mayor here last night. There's a lot of people who have concerns. Not a good thing, not a bad thing at all. Some people may not think it's a good thing, and they're reevaluating a lot of things. So it's always a good time with any of these types of things to see of like how you can step in, make a connection, and gain a new client. Now this is an oldie, but I think it really is a goodie, and I think it fits really well today, especially with millennials, is looking at the human economic life value. So this is just an example, and here at 35-year-olds, you know, what their income potential is in 30 years. So, you know, taking a teeny portion of what you're doing now to help protect that 1.5 million, pretty important. A lot of times now I'll see, like, with people who are in that millennial category, you know, one thing that has changed a lot now is the options to work from home, and people are able to get a lot more work done when they work from home. I know on occasion when I work from home, I get a lot more stuff done when I don't have people here to chit chat with. They're also making a lot more money. So I think about now, you probably could even use the same thing, maybe with a 25-year-old making $50,000 a year. It's a pretty big number. Just think about it. So now the big question for you, though, is I see some of the different things and reasons I should look in, you know, sell a little more DI maybe than I'm doing now, but why? I think the biggest reason is, what are you doing to differentiate yourself from the agent down the street? What are you doing to differentiate yourself from online access? What are you doing differently than maybe the agent they just had stop by their house? So I always like to think about, if and this goes with any type of insurance, your P&C agents now will send out mailers or have, an intern or an associate in their office make phone calls out to also talk about life insurance. I actually just got a phone call from the associate at my P&C guy's office a couple weeks ago. She didn't know I worked in insurance, but that was okay because I didn't even know they had life insurance. I didn't know they had other products they would sell there. They do. Found out actually he sells more life insurance and disability insurance than he does car insurance. But what he's done is he has really dug in and made a market for himself. So even if me as one of his clients who maybe just has the P&C products, or you as one of his clients that maybe had interest and have life insurance, it's easy just to buy it from him. He'll add it on to my bill I already have that comes out every month. What has he done now? He has really taken a step up from that agent that may mail you something about insurance now because you have multiple products. I think that's probably one of the biggest things today that you can do as an agent is get multiple products with your clients. So think about all of those clients in your book of business that you have written a life insurance plan on. How often do you check in with them to follow up to see how their needs have changed? And when you do have those conversations, are you bringing up disability insurance? If you're not, I definitely encourage you to start looking into that. There's not a whole lot of competition in the disability realm. So there are select groups around the country that all they do is focus on disability, but you don't see it as much now as you did back in like the 80s and 90s. But the need, I think, is even more now. So what can we do for you to strengthen that relationship with your clients? Okay, so now that I have blabbered about that for a while, I want to dig in here on some sales ideas for you. So first thing I'd like to talk about, and this is probably one of the biggest ones that I hear myself, is that I have insurance through my workplace. It happens. Everyone thinks they probably have a lot of insurance through their workplaces. They know they have a life insurance plan. They know they have a disability plan, but there's a lot of gaps in there. So what we want to do is turn that from an objection into an opportunity for you. So these are just some questions that you should ask. Ask about if it's, if we know we have disability because we see it on our pay stub. Well, do you know, is that a short-term plan? Is it a long-term plan? Do you know, is there a max benefit on that? What do you know? 99.99999% of them don't have any of that information. The only one who may know may be the person in HR. So just looking at some of these questions here, just different things. They have insurance, it's great, but yeah, is it group or is it a worksite type product too? Group products, most of them are not portable. Worksite, they are. But a lot of times, those type of plans will have those limits on them. So, it doesn't matter if you're, let's say one of your clients is a CEO of a company or a vice president of a big company. He says he has disability insurance, but maybe you find out it's actually, there's a cap on it of $3,000. So if you have a CEO or a VP of a company, chances are their paycheck is going to be probably double or triple that $3,000. So what can you do there? Just asking some of those questions to get in and help them and review over their benefits. I have done this personally here in Lincoln, or Lincoln Public Schools. I have met, my mom used to work for the public schools, so a lot of her friends are teachers, and it's surprising for them, they had no idea how their plans were set up, found out they only had short-term insurance. So there's a lot of opportunities there for a long-term policy. And most of them are willing to do that because as a teacher, they're spending most of their day standing up, walking around, helping students out, bending over, working on carpets with kids, reading books, etc. So there's a lot of space there where they could see where something could happen. So it's just asking some of those questions and trying to dig in with them, but make sure you're doing it comfortably. Don't, if they are clearly, I have it through work, no thanks, you may want to ask them one more question, but depending on how that goes, that might be one that you let go. But you may find another one who kind of thinks like, why are you asking me those questions? And they want to know more. So just make sure you have some questions like these ones, and this presentation will be with Joey afterwards. So if there's anything you guys want to take from this and use, I definitely encourage you to do that. So this is typically what you will see with short-term DI plans through employers. So the 3 elimination periods I have seen most when I have been out myself, you'll have different options depending on the industries too, where they may be a different elimination period if it's an accident versus a sickness. So you might have, they might tell you numbers like 00, 07, 714. So that first number usually is for an accident, and that second number is usually for a health related. So typically though, those plans will go, anywhere like 3 months to 6 months. Some of them you'll see go for a year, and that's it. So there is a huge gap there. Now the nice thing is you can do a 365-day waiting period. So we can match up really to coordinate with that simplified plan. So if something were to happen, and that's where you can give a little scenario, a little story, if something were to happen, now we're going to make sure, even when that plan runs out on day 365, 1 year from when that disability was diagnosed or occurred, we're going to make sure we're able to continue that, for whatever year benefit period they choose to go with. So here's just an idea for you to take a look at here. Dental hygienist, we're looking at her taxes, what her income is, looking at the group policy that she has. So we can see right here in the screen, we can see that gap in gray. So group benefits, if that is paid for by the employer, that is taxable. That's another really good question to ask. Do you pay for that benefit, or does your employer pay for it? That's another one. 99% of the time you're going to get an I have no idea as an answer. So what we can do here is put in one of our disability plans. It's going to be a small plan. It doesn't have to be necessarily a huge plan. We're going to do an $800 a month policy, another $30 a month for her. So it's going to get that gap up where it needs to be. Now the nice thing is you're helping her out. But the one thing you've also done here is she probably has a few other hygienists in this office and may have some friends at the office down the street too that she's going to give you referrals to. So even though this sale is only a $30 a month premium, I think it could probably get you a good 5 or 6 other sales fairly easy. So the basics on our disability plan, it does cover on and off the job, so that's never an issue. Up to age 60, 4 occupation classes. We can offer benefits up to $20,000 depending on that occupation. Benefit periods currently up to age 67. Non-medical underwriting. If you have a client up to age 50, we'll go up to $3,000 non-medical. And we do offer some different options for business class owners as well. So next thing I want to talk about is, let's say you have that consumer who does they tell you they're interested, they want to see a quote, you're giving them information, and they tell you they want the Cadillac, right? Everyone wants the Cadillac. What does that mean for disability? Well, I want the plan that's going to cover me 100% regardless of what happens, starting off on day one until the end of my life. Well, we know disability insurance does not work that way. And chances are, if you do run a plan for your clients, most long-term plans obviously will start off with the shortest elimination of 30 days. Depending on the plans, here at Assurity, we'll go up to age 67. Still a pretty good Cadillac of years that we can cover for someone. But what happens when you show that client of yours what that premium looks like? 50% of those lose the sale at that point. So what I like to recommend is you still run that option they want, but let's give something else too. Let's look at how we can utilize riders on a policy to give that client something that they're wanting, but looking at it from a different perspective. So we have 10 different riders you can add onto a policy to add different functionalities for the consumer to get something that they're looking for without necessarily having to pay for that longer benefit period or that shorter elimination period. So I'll point out a couple on here that I see used the most. These are a few that I quote the most myself as well. I'm looking at that top row. Well, that supplemental disability rider, that one's a good one, to kind of split up that benefit between the base, any kind of offset there, maybe covered by social insurance. With this though, and most companies will see this as well, we see a lot of the policies include that because it helps bring down the premium. Since it's a shared risk, we're able to offer a benefit at a lower premium amount. Next one I like to add on is that retroactive rider. What this does is your client still could have, let's say, a 60-day or 90-day elimination because that's going to fit better when it comes to the cost of the plan. But adding on this retroactive rider, which costs, depending on their client's age, 30 to $1 a month, 30 cents to $1 a month, I should say. And what it does is after the client has met that elimination period, if they have become disabled due to an accident or an injury, we will go and reimburse that base benefit. So if your client has a base benefit of $2,000, once they've hit 90-day elimination period, when they receive their first benefit check from us, they also would receive an additional $6,000 to back pay from that injury or accident from day one. So it's a great way to say, hey, instead of that Cadillac you wanted, let's do this. Let's do the Chevy with a few upgraded features on it. The other one I see added quite a bit, and this will be on occupation classes that maybe don't have access to the 2-age-65 or 67, is the catastrophic rider. What this will do is give the client an option to extend the benefit period for a catastrophic disability. Now, this way this rider would work then, if you have a client who, let's just say, just has a broken leg, or maybe they've hurt their back, not able to do their job, well, chances are that's not necessarily going to be something that keeps them out of the workforce for the rest of their life. It may, put them off for a year, maybe 2 years, depending on what they hurt and what they do for a living. But most of them, will be able to go back to work. Now, a catastrophic disability is going to be something where they're not able to do all their ADLs, and it's looked at as a lifetime disability. It's going to do the same thing as that 2-age-65 benefit period does, but at a much lower premium. But, and I don't have any stats on this, if you look at the disabilities that go on beyond a 5-year, it's going to be something pretty serious where they probably, have started or already start receiving Social Security disability as well. So it's a great way, adding this rider on, a few bucks a month for that versus, an extra $50 a month for the 2-age-65. Just think about that one. The other two I see used quite a bit is a return of premium rider, especially for those millennial clients. It tends to be a big hit because they do not think anything would ever happen to them. Well, let's just start this off as another savings training for you of where you can put money away if something happens, you're covered. If not, you can show them what that return of premium would look like. The last one I see used quite a bit for the millennials is that guaranteed insurability rider. It gives them an option to basically double the base benefit of their plan. Obviously, their income has to suffice that. But for those younger clients, it makes a really great opportunity for you to go back and sell some additional insurance without them having to go through underwriting again. So some great things you can do there. Just to show you kind of what this looks like, here was a case study on an ER nurse. So we're doing a total of $3,430 per month, a 5-year, 90-day. We're included that guaranteed insurability, the retroactive. We did break up and do that SDIR benefit and return of premium, little under $72 a month. So pretty easy for that ER nurse to see that need too, because they live in that environment every day. Next, I have a landscaper. Here, we see that benefit at $3,800. And how that breakdown is, now here we just did a 90-day 2-year. We add on that CAT rider to age 65, retroactive rider. And here we added on that critical illness rider. You know, maybe this particular client, well, I'm out on the sun all day. I want a little extra protection for critical illness or cancers. Great thing is this plan, adding on that separate plan as a rider, we're able to do this for her at $121. So if we were to run, and this is one I did, just I don't have it here on the slide, but I ran this same client. If we were to do it to age 65, the premium was about $270 a month. So by cutting down that benefit period to that 2-year, adding on that CAT rider, you can see that makes a huge difference. Huge. Next, think about the clients you may work with who own a business. Now, whether it is a 1-person business or a 10-person business, there's always some general thoughts that maybe don't always get considered. So the biggest thing to make clients realize who are business owners is going to be a separation of your personal income and your business income. So we're looking at paycheck protection to cover your client for what they bring home and keeping a roof over their head. And then we look at payroll protection by covering expenses of the business. So we don't ever want to have that business owner have to make a choice of which they're going to pick. Are they going to choose taking care of their family and keeping that home, or are they going to choose keeping the business going? And that's something a lot of times they don't necessarily think about of the separation there and what can happen. So the business overhead plan, this one does fit on really nicely alongside the business overhead, or excuse me, the personal DI plan. And this will act as a reimbursement plan for any covered expenses. Now, a covered expense for a business is going to be anything that they have except for their own salary for that business owner. So we think about any type of reimbursement of expenses that they may have. So think about bills, think about, here's some examples of things which are pretty customary you see in that business. So everything, mortgage or rent payments, any utilities, taxes, insurance premiums, any type of office furniture payments or leases. I think of even if, let's just say it's a carpenter or a contractor, there may be trucks as well, safety equipment. So there's a lot of things that would fit under that covered expense. So again, just think of it as that umbrella that's covering everything, any expense of the business, with exception of that owner's salary. So here's just an example, and this is something we run into a lot here in Nebraska, contractors. This particular one here, we showed 3 employees on staff, personal income at $60,000, so we're able to do something for him on that side. And then we're looking at his business expenses. Now, what we did is we had them just list out, this client list out anything you were paying on, and chances are they're using like QuickBooks or another service. Maybe they have someone on staff who actually does do that for them, or they have an accountant, just try to get a copy of what happened this last month. We can see here how for this particular one, we got to that $15,000 benefit. So we got kind of the breakdown of different categories of things that we would do. So now what we see here as a solution for this, we're able to do an occupation class with a business owner upgrade. So we're able to offer a higher benefit for them too. So we did one premium for the disability, one premium for that BOE plan. So total benefit, we're looking at $145.44. Now, if they were to have, let's say, he were to offer a disability policy for his 3 employees as well, then we would offer a 15% discount on any of the Century Plus and a 5% on the BOE. Now, one thing that I always get questions on when it comes to business owners, though, is, well, maybe, do I really need this? Like, I have 3 employees, they'll be able to continue running the business. Now, while that is great to think about, what was that owner doing? What was he doing for the business? Was he the one out, going out looking for new jobs? Was he actually a big part of the workforce as well? Where did he fit in? And so I think what a business overhead plan really does for your client who owns a business is it enables them some time to make a decision. Whether it is just 6 months to get back on his feet, back out working, in the contracting world, or maybe it is a scenario now where, he wants to keep his business going, but maybe we have a more serious disability we're talking about, and he needs to make a decision. We don't want him to have a fire sale to sell his business. We want him to be able to take some time, to figure out how he wants to do that. Maybe one of his employees wants to purchase that. Take some time to be able to make those types of decisions and not have to do it day one. So I'm going to leave you with some of the other common objections and how you can turn those into sales ideas as well. And I imagine if you guys have ever sold disability, the objections that you see on the screen here, these probably are the ones you hear most commonly. And I kind of like to summarize it all up with this, of how you replace your lost income. So I think about savings, think about, retirement funds, IRAs, anything that person has put away for their future. 1 year of disability can make several years of savings disappear. I have a friend of mine, her mother was just put into a nursing facility this past Friday, $7,800 a month. So if you can imagine, if we have $7,800 a month, what does that look like in a year? $93,600. Now, what happens if we also have, maybe the disability is serious and we have hospital visits in there, and we're talking about deductibles and the other, if there is another spouse or maybe a little bit older client who has working children, taking time away from work, like where does that dollar stop? They can wipe through $1 million in under probably 5 to 10 years. Other income. I think about, we hear that, well, even if I go out on disability, my spouse works, my significant other works, my children have great jobs and they'll be able to support me. It doesn't always work that way. There's a usual standard of living that people like to live in, and at some point that becomes more of an adaptation than a living scenario. chances are my friend, you know, she's not going to go out and ask to borrow $700, $800 a month to take care of her mom. Just think about that. Social Security. Well, this is one, I'm pretty sure there's an article about Social Security at least once a week on CNN Money somewhere. And just talking about, you know, it's supposed to expire in this year, and then next year we hear it's supposed to expire in the next year. But I also think about Social Security disability. It's not easy to get that. And the reason it's not easy, it's not a bad thing, I don't feel. Sometimes there's scenarios, obviously we've all heard, but I think the biggest thing is we know you can't even apply till after 6 months. So what are you going to do in that 6 months you're disabled before that? Usually after that 6 months, the first time people apply, unless they have a condition that is on the automatic list, they're going to get declined. Fast forward another 6 months to a year before they may actually receive a benefit. So who's going to supply that income for that 6 months to a year and a half that they're waiting for a payment? And also think about the last part of what you see up there. They've got to be pretty bad then. They've got to be unable to engage in any type of occupation. It's pretty specific. So the last one, and this is one I've heard quite a bit, and I suppose someone could get away with it if they really wanted, but borrowing money. You can't go to the bank and borrow money if you're disabled. There's no way for them to get that money back. So really think about that. It's not a good solution. So my challenge to you today is just based on some of the things we talked about, create a list of clients that you think you can reach out to. Think about those people that you have that said they have insurance through their jobs, that you could reach out to just do a benefit review for them, help them identify those gaps. Look for those clients maybe that you've worked with already on life insurance products or other insurance plans where you remember they were the Cadillac clients. And then think about those clients that even on the life insurance side, it took you a while to get those sales just from different things they tried to give as an excuse. Just think about some of them and make a list. And I encourage you, I'll say by the end of next week, just since we're in the middle of this week now, to reach out to at least 5 of them. Reach out to 5 of them to do a review with them, to go over disability. Hey, here's a new product I have available that I think fits your needs pretty well. Just really think about that and make that list. So with that, I will open it up back over to Joey and open up for any type of questions. You guys are always more than welcome to. Joey is a great resource. I work with him almost on a daily basis, so definitely encourage you to keep utilizing him as you have been. But also Doug or myself are here to help you out as well. So if there's anything we can do, just let us know.
All right. Thank you very much, Christy. Great job.
Thank you.
A lot of information there. And it does look like we have a couple questions here. We had one from Ed Vines. He said he's working on a case. Is Assurity a mutual company, and when was Assurity established?
Well, Assurity is a mutual company. We're actually a combination of 3 mutual companies, all based in Lincoln, Nebraska. One had a focus from the beginning on disability, one on life, and one on direct consumer mailings that were done. This will be our 129th year come this August. So we've been around
Awesome.
for a long, long time.
Sure. All right, thank you for that. And then Tim Berlin had a question. He said, can you explain in more detail how the SSDI works when a claim is filed? For example, when someone files a claim to Assurity, must they also apply to SSDI at the same time? Or who would be good to talk to about this at Assurity?
Well, in regards to SSDI, I will tell you, you'll have to do that through like their website, and most cities will have resources available to help you with that. I would encourage you, if you have a client that is disabled, definitely do the paperwork through Assurity or whichever carrier it is for that claim. I also would start looking into the Social Security disability at that point. As I mentioned, depending on, what that client's, what their condition is, if it's something, and you can go out on the SSDI websites and see the list of conditions that automatically qualify for a claim. If you have one of those, I would say go ahead and fill that paperwork out, get that process started. If they don't have one of those, wait to 6 months, because if you fill it out and it gets there before 6 months, they're going to decline it anyways and tell you can't apply till after 6 months. So I think anytime with a client, you can start a process, definitely get it started. You can get paperwork and start helping them get that completed if you're helping them with their social insurance. Usually in most scenarios there, and this is just like, I think it's kind of difficult sometimes with Social Security disability. I definitely would look to help them find that resource in the community, because they're going to have to fill out paperwork on a pretty consistent basis there based on their disability. Our team here, or any claims area, after the initial paperwork is in for a claim, we'll do follow-up with the doctors, kind of make that a little bit easier for the consumer there. But when it comes to Social Security, I'm not sure what their follow-up process is. So I think it definitely is good to help them out and get in touch with the right resources. But I definitely would, whatever resource you pass them off to for the Social Security disability, I probably would somewhat try to stay out of it after you help get them in touch with the people, just because a lot of that stuff you wouldn't be able to get the information on anyways.
Okay. And then Tim just responded, he said he means if the SDIR is part of the policy.
Once that does happen and they qualify, you'll get, the client would get something, and then you can just forward that on to us. And a lot of times if they're on, when they fill out that paperwork, it'll ask them if they have disability. So a lot of times too, a company will automatically get that letter from Social Security if John Doe now is eligible for $1,000.
Qualifies for it.
Yeah, we'll get a letter as well. That's how most scenarios we'll get that information, because the client will be giving information on their policy on the paperwork.
So then Assurity will pay it out up until they get that notification?
Yep, we'll pay it out in full, and then if they have that SDIR rider, that at that point we would just coordinate benefits however need be to make sure that's taken care of.
Okay, I appreciate that. Well, if there's no other questions, I thank you again, Christy. It was a great job, great presentation. If anybody liked any of the slides or would like a copy of that, just please reach out to me. My contact information is there. And again, in the handout section, there's that social media calendar for the whole month of May to try and gain up as much interest as possible. So thanks again for everybody for attending. And Christy, thanks again, and hope everybody has a great day.
Have a great day.